Hey guys, welcome to this podcast, and today we'll be sharing with you what is in many hearts of Singaporeans today on whether they should invest their money in the Singapore property market or in the stock market. Just investment perspective today, we'll just be running through details. So if this is something that you are very interested in, you want to stay true till the end of the video. Now, in this topic alone is often framed as a zero-sum game. Like it's as if you have to pick a side and stick with it. But the smartest investors don't think it in the absolute. Like they have to choose one or the other. They look very deeply and they choose based on where they can build an edge. So the discussion especially is important if you're planning for your next big investment move. You have worked really hard for your money and you want to make it move for you. If you find this episode valuable, do us a favor, check out our previous episodes on this channel and hit that follow button, because in this channel we don't just talk about money, we talk about what you can do with it. Now diving right back into the information. Now if you're looking at a property in Singapore, things get complicated real quickly, because for couples trying to turn two incomes into properties, one big hurdle is the ABSD, the additional buyer's stamp duty that you have to pay. So ABSD for a Singaporean buying a second property was raised to 20%, and that's a massive cost for investor. So if you're eyeing for a $1 million condo, $200,000 goes in taxes. Not a very good move for investors. So what do savvy investors do? Many turn to a workaround known as decoupling. So here is how it works. So one spouse sells their share of the property to the other, becoming technically propertyless. That allows them to purchase a second property without triggering ABSD. Since it's now their first property again, at least on paper, it's a legal strategy and it's all about staying efficient. However, as today, there is legal boundaries to work around this. You are unable to just purely just do that and to escape tax, because that is illegal by itself in the recent news article. So do feel free to reach out to your favorite lawyers or to myself. I will guide you to the best person to make sure that you are under the legality boundaries. So understanding these mechanics is vital, because the ultimate goal is simple. It's capital gains, right? We are aiming for a repeatable strategy that can deliver 300 to 400,000 per investment cycles, which typically is over 4 to 5 years. But in order to do that, we need asset classes where the average Singaporean can actually develop an edge and make sure that when it's time to sell their investment property, we are not the exit liquidity for someone else's trade. Also, to do that, right, the property that you buy must have eventually a buyer pool that is ready to give you the profits that we are looking out for. If not, it's just an imaginary capital appreciation upon when you are purchasing the property. So if you want more information on that, you feel free to reach out, we can share more, or we have other videos that share with you exactly how you can spot the right investment property. So this is a major decision, obviously. So we are talking years, maybe decades of financial commitment. And if you're weighing whether to go all in on a second property or double down on your stock investment, feel free to reach out. We can share practical insights and real-world examples to help guide your next move. Okay, let's talk about the barriers, right? So especially for real estate, because this is where stock wins, hands down, the biggest roadblock is the starting capital of buying a property. If you're eyeing for 1.5 million investment property, you need 25% down payment upfront, which is 375,000 just for down payment, and that's before the stamp duty and legal fee. You also need to qualify for the loan based on your income, and you compare that with stocks where you can get started with just a few $100s, no massive deposit, no TDSR or CPF rule, just open a brokerage account and you can begin your investment journey. Then there's the hassle factor. With property, you're tied to a mortgage for decades. That monthly liability links to your lifestyle, to your job stability, and if the economy tanks, so does your cash flow. Stocks, especially a buy and hold portfolio, comes with zero maintenance stress. So let's look at pure returns. Historically, from year 2000 to 2024, US stocks, especially the S&P 500, had a 6.3% returns compared to a 3.3% for Singapore non-landed private property. On a raw growth, stock wins, but raw returns don't tell the whole story. Let's talk about leverage. In 2025, property loans in Singapore ranges from 2.36% to 3.03%. Margin loan for stocks around 6.83%, and they come with way more risk as you are doing your stock investing. Real estate leverage is cheaper and more controlled thanks to things like TDSR and loan to value limits that help to curb property bubbles. Then there's tax efficiency. Stocks are nearly tax-free in Singapore, no capital gains tax. But for property, you're hit with the non-owner occupied property tax if you're renting it out. And of course, when you're buying buying the property, there's stamp duties and rental income tax. So for example, 1.5 million condo earning 5,000 monthly rent comes with layer of recurring costs. This isn't simple stuff, right? So that is why it pays to understand when and how to deploy your capital. If you're into such deep analysis like this, hit that subscribe button whenever you're listening. We break down financial framework so that you can make the right move. So why do so many people still choose property despite the hurdles? Two words, right? Leverage and stability. Let's say you put 500,000 into a 2 million property. If the property appreciates by 15%, that's 300,000 gains, which translates to an 80% returns of your invested capital. Now, if you put the same 500k into stocks with a 10% return, you only make $50,000. So property wins here by miles. Then there's stability, right? So property prices move slowly, there's less volatility, and government policies like ABSD and TDSR that actually cushions against extreme market corrections. It's a regulated market that helps maintain confidence. So lastly, real estate protects wealth. It hedges against inflation. Over the past 20 years, Singapore property prices have outpaced inflation by 3 times. Plus, it's flexible, you can live in it, you can rent it out, or even refinance it during the tough times. So let's recap. Stocks give you liquidity and high growth potential, while property offers stability and leverage. But the real insight is that you don't have to choose. You just think in systems. Use property as your core wealth generator. Buy a home, aim for a second investment property, and let it appreciate and let the rental income do the work. Then channel those gains into stocks and let stock become scalable growth layer, offering agility, diversification, and massive returns. And that's how you build a barbell portfolio: stability on one side, agility on another. So you match your asset class to your capital, skills, and interests. Don't force a strategy that doesn't fit, because building wealth isn't about chasing the highest return. It's about clarity, consistency, and confidence in the path you're on. So thank you once again for joining me in this episode that shows stock versus property. We will see you on the next one.